and welcome to the show, The Trump Card. There are days and then there are days. When President Trump first mentioned tariffs, many thought they will cross the bridge when they get there. Lo and behold, the president is in action. He has played his Trump card. But could this be counterproductive for United States? The ongoing tariff war launched by President Trump is creating waves far beyond American borders with significant repercussions for the global economy. The recent imposition of a 25% tariff on imports from Canada and Mexico, along with a doubling of duties on Chinese goods to 20%, has ignited tensions amongst the U.S. top trading partners. While the administration claims these measures are necessary to curb the flow of fentanyl and counter unfair trade practices, the real consequences are being felt in supply chains, consumer prices, and international diplomacy. The immediate fallout for the U.S. is economic disruption. The American consumer, already grappling with inflation, will bear the brunt of these tariffs, with increased costs on electronic goods, agricultural products, and automobiles. Household expenses are set to go up. Industries relying on North American trade integration, such as automobile manufacturing, will suffer from higher production costs due to increased tariffs on essential raw materials. U.S. farmers, who previously suffered a $27 billion loss due to the first phase of Trump's tariffs, now face renewed uncertainty. China, a major importer of the American agricultural products, has retaliated with tariffs on grains, dairy, and meats, adding to fears of revenue loss for American farmers. Financial markets are showing signs of distress, with the stock indices tumbling in response to the uncertainty of prolonged trade battles. China has not remained passive in this tariff war. In response to Trump's latest trade barriers, Beijing has imposed additional tariffs of up to 15% on U.S. goods while launching export restrictions on certain American firms. More critically, China has placed restrictions on 25 U.S. companies, particularly those involved in arms sales to Taiwan. This move signals a broader geopolitical response beyond mere economic relation or the souring of the relations and the retaliation also. And this demonstrates China's intent to pressure Washington on key foreign policy issues. One of the biggest concerns is the impact on global technology trade. With the new U.S. tariffs targeting Chinese consumers, electronics, including smartphones and laptops, supply chains for tech giants like Apple and Dell may face disruptions. China, in turn, could implement tighter regulations on U.S. semiconductor imports, potentially affecting production in one of America's most lucrative industries. Canada and Mexico, longtime trade partners of the U.S., have now been forced into an aggressive stance against the new tariffs. Canadian Prime Minister Justin Trudeau has announced retaliatory tariffs on U.S. goods worth 30 billion Canadian dollars, with potential expansions if the dispute is not resolved swiftly. The targeting of American staples such as beer, bourbon, and orange juice is likely to have political ramifications within the United States, especially in the states reliant on these exports. Similarly, another neighbor, Mexico's anticipated retaliatory measures could further disrupt industries, particularly in agriculture and auto manufacturing, which heavily depend on cross-border collaboration. The European Union has also expressed concern, stating that Trump's aggressive trade policies could lead to broader disruptions in global commerce. With the US floating the idea of reciprocal tariffs on EU goods, European manufacturers are bracing for potential economic turbulence. Trump's tariff war is shaping up to be a high-stakes economic gamble with uncertain outcomes. While the administration sees tariffs as a leverage to force trading partners into more favorable agreements, the immediate impact is economic strain at home and abroad.